Welcome to this week's ASX strategy session. Thanks for joining me. Great to have you with me. Lots of interesting things happening this week with all-time highs in the markets and movements in the commodities. A couple of stocks I want to show you later on, as well as any stock codes that you have that you'd like me to have a look at. So get those ready. We'll go through those at the end. As always, everything today is general commentary only, doesn't take your personal situation into account. Having been through all that, let's now jump over into those charts. So the first chart to look at this week is the ASX 200. And so a new all-time high. New all-time high for the ASX 200. And this was almost unimaginable a few weeks ago. Just think back to where things were, let's say about 6 or so weeks ago. And this is the thing with the stock market. The stock market often does things that few people believe is possible. Like, who would have thought that the market would be hitting all-time highs just a few weeks after this point of maximum fear? I think the big question now is, should you consider buying the ASX 200 at an all-time high? And I'll tell you what I've done in a moment, but first of all, let's just look at the structure as it stands. So the first point, I think the first point to note is that we have these rising moving averages. So as I always do, I've got the 50-day and the 100-day moving averages. And you can see both are clearly trending higher. And also another important point is that the price is also above the moving averages. We have several all-time highs this year. So we're talking about an all-time high now, but it's not the first one this year. There have been several all-time highs through the year. And we've also got this well-defined series of rising lows and, of course, of higher highs as we've moved through the year. So these are all things that define a bullish structure. The other important feature to note, I think, is that these pullbacks, you can go back to the start of the year, the pullbacks back towards the moving averages. Sometimes they've gone a little bit through the moving averages, but generally speaking, these pullbacks have been well supported and had strong rallies that have followed. And this is a sign, I think, of strong underlying buying interest. I know a lot of people get fearful when a market is at an all-time high. They see the news reports. Market hits all-time high. A lot of people get fearful. They worry. Look, is the high close at hand? And I really do understand where it comes from. It's quite an emotional thing when you potentially for someone to go, look, a market's at an all-time high. Should I buy? Like, why do I want to buy now? Wasn't the best time to buy sometime in the past. And the thing with all-time highs is there's often someone out there or groups out there talking negatively, and they'll give you all these reasons why the market should be close to a top and why it's such a bad time to buy. It's interesting. I was going through my X feed, X, the old Twitter, my Twitter feed today, and I saw a few people putting up graphs that predicted tops in the market. They'd take a period from the past and they'd overlay it with the current setup, or they'd draw lines around the current price action. All of these things to indicate there should be a big decline coming. But it's all well and good to try and do that sort of thing, but that's just not what the price action is currently telling us. Price action is telling us we have rising moving averages and price is above the averages. And I think when we connect all those pieces together, and those being the rising moving averages, the higher highs, higher lows, price above the moving averages, series of all-time highs, we clip all those things together. And I think the conclusion that we should come to is the path of least resistance is up. It's certainly not down, is it? The path of least resistance at this point in time is up. And yes, that will change at some point, but no one knows when. And this is the thing. You can put out all the graphs you like showing that something else should happen, but it's currently not happening. And until we get clear signs of a topping phase, and for me, that's going to involve price being below moving averages, which have started to roll over, until we start seeing that sort of setup, I believe the play here is to approach this market from the long side, and that's been the case all year. That hasn't changed since late last year when price got above the moving averages. That's consistently been the theme of these strategy sessions. It's be long the market, stay long the market, but of course manage risk. Now let's have a look. I want to go over and have a look at the equal weight, the ASX 200 equal weight index. I think this is a really important piece of the puzzle. You see, it's still range bound. You can see this big trading range that it's been in since around March. So we've got quite a few months of just tracking sideways. And we need a breakout to provide clear directions, either to the top side or the low side. One way or another, we need a breakout. But overall, I think this choppy sideways action that we have, I think it looks corrective. I think we've had a strong rally off the lows from last year, and now we've got this sideways corrective phase. And I've often seen this sort of structure provide a platform for higher levels. So we often get these periods where a market will rally, it'll go sideways, and then that becomes a new base at a higher level, and then we often get the rallies off it. Doesn't guarantee it's going to happen on this occasion, but I've seen it happen so many times. And I think the best bit about this is that the levels for me, the levels look pretty clear cut. We have the August high and the August low just a few days later. So they pretty much bound up the range. I think the next one of these that breaks, it's I think the next one of these breaks is going to lead to the next round of momentum. I favor an upside break. I think we'll then see momentum to the upside. We don't have the break. We need the break first. That's my favored view. Of course, we get a break to the downside, the structure changes, but we'll talk about that should that happen. When we step back and we look at this chart, going back to 2020, or really the main focus point I want to look at really, I guess, is from the June 22 low. When we look at this from the June 22 low, I think we can say that the overall movement since that period has been up. You can see we've got this series of rising lows over the period. There's been this general movement towards an increase in price in the equal weight, and I think the incumbent trend gets the benefit of the doubt. And from that perspective, I think, as I was saying, I think the odds favour this range is going to ultimately resolve to the upside. Now, coming back to the ASX 200, I would have liked to have seen more consolidation. This is something I've spoken about over the last couple of weeks. I thought we might have got some sideways consolidation through September, build a new platform, build up some energy, and then break to the top side. That's not what we have, but that's the thing. We often don't get the perfect setup. We often don't get the price action that we'd like to see. But rather than looking for reasons to avoid the latest breakout, I think the play here is to go with the market's momentum. I've been buying some stocks through the week, so a lot of the stocks I buy is at that smaller end of the market. I've added a few of those through the week. And I also bought yesterday, towards the end of the trading day yesterday, probably not too far from where prices are now, maybe a touch below where they are now. I added to my ASX 200 ETF. So whilst my main portfolio is built with individual stocks, I'll also put capital I have on the sidelines into an ASX 200 ETF from time to time, and that can also be a longer term hold with that as well. But the point is, I'm buying at an all-time high. I'm not saying, look, all-time high, it's too late to buy. I'm going with the momentum. Doesn't mean I'm going to be right. The market could come back, could retest some moving averages, could break down, but that's not the price action we have at the moment. I'm dealing with what we have, not what could be the situation at some point in the future. Still, I'm not fully invested, but I'm actively looking to increase my market exposure. And for the reasons I've been saying. I think the odds favour higher levels. And of course, just because the odds favour something doesn't mean that that outcome is going to eventuate. But I think if we, as a general proposition, I think if we buy markets when they're at their highs, that over time the trend will favour that process, and higher levels will often lead to more higher levels. I'm also using those wide trailing stops. If we do get pullbacks, if we do get a pullback of sorts, I want to be able to try and see that off when they occur. And of course, the trailing stops, they also get me out when conditions change. So it's not about being blindly bullish. It's being bullish according to the price action, and when that price action stops supporting that case, I've got trailing stops, exit stops to get me out, get capital out of the market, put it back on the sidelines. Now, if you're getting some value from this, please hit that like button. Please leave a short comment. Just, hey, thanks for the video. Just tells YouTube you're watching. YouTube shows other people. Helps me heaps. And yeah, so please do those things. Now, let's now I'm about to move on to the small ordinaries, the commodities. Of course, any stocks you want me to look at, any stocks you like that you'd like my technical view on. But of course, that wraps up the free section. If you're not a strategy session member, there's a link below. Click it, come on in, costs you very little. And yeah, look, just being asked about the stocks that you're interested in, hopefully is worth the price of putting all this together alone. Now, okay, so let's roll on in to the small ordinary.